Good morning and welcome to my morning report analysis videos with me, Richard Perry, market analyst at Hantec Markets on Thursday the 14th of February. We have still a positive move coming through these markets. We've had actually some decent data for a change out of China. Trade data came in quite considerably ahead of expectations on the trade numbers overnight, and that has certainly helped to stabilise sentiment. But you do still have this big dollar move that continues. Actually, the dollar's been a bit choppy in recent days, but yesterday we regained that sort of that upside move on the dollar, and it has continued today. Now, it sort of comes as the continued signs of US outperformance on the economy is an issue for the markets. You've got Eurozone data which continues to disappoint. Again this morning you've just had out German GDP numbers which showed that Germany is actually on the brink, or actually escaped recession just by the shade, being sort of flat on the quarter. Technically recession was 2 negative quarters in a row, so it just avoided that, but certainly there'll be a focus on how the Eurozone now performs at 10 o'clock this morning. Flash GDP estimates of 0.2% growth in the fourth quarter. But the concerns about the Eurozone slowdown continue. All the while, US numbers continue to remain pretty solid and pretty steady. You had inflation yesterday, which actually ticked higher in the States. So again, that sort of drove the dollar gains into the afternoon and overnight. And what we've seen is that sort of held on to that move today. With that move, whoops, sorry, that's the wrong one. And that has sort of dragged gold back. Gold was above 1316, which is a bit of a pivot level on a near-term basis. It's back down below that level, 1306 now. Equity markets are bordering positive still. You've still got gains on Wall Street markets, and also futures are up again in a similar fashion today. However, European markets were much stronger early doors, and that sort of those gains have been pared to an extent. And there is a sort of a slight concern I have with the sustainability of this DAX run higher, and you can go onto the website and see my DAX analysis for more information there. But it is interesting that the DAX, some of the technicals on the DAX are sort of not as positive as perhaps they could be. So you do still have this gain coming through on the Kiwi dollar, another 0.5% higher against the US dollar today, as the market continues to respond to that surprisingly upbeat assessment from the RBNZ yesterday. That's certainly impacting. But now, in terms of data points, we've got quite a lot today. Retail sales to the US, weekly jobs claims, and PPI in the afternoon. I've talked about Eurozone growth already, so let's look at the US numbers. And what we do have is the expectation that US jobless claims are going to be 225, which on this is basically around about where the 3-month moving average is, or the 89-day moving average. So that's 130. And then we've also got the PPI, which is another indication of inflation in the States, factory gate inflation, expected to come down on the headline, but remain pretty solidly above, pretty solid on the core, 2.5 on the core. And then also we've got the retail sales for the States, which are expected to be plus 0.1%. Why can I not see that? Plus 0.1% on the month. For some reason they're not there. Okay, fine. So that's this afternoon. Anyway, so let's take you to my chart of the day, which is Aussie Kiwi. Now this is an interesting chart because I think the Kiwi is gaining ground on the Aussie, and that's continued to be the case over the past sort of 6 months or so. We've now seen a decisive downside break of the key floor. Around 104.30 has been a floor over the past 2 or so months, 10 weeks, in a range situation. But yesterday, sharp move to the downside, closed below that level, and we've continued to the downside today. And it looks as though the Kiwi could potentially be moving towards parity. You could arguably make that a downside break of a range play, really. Sort of 104.30 to 106.50 area, you could sort of project that downwards, and you sort of come out towards certainly testing these the next low of the Q3 2017, which is 103.60 area. But again, the Q1 2017 levels in the low 103s could easily come under pressure now, and then a move back towards that 102.30 area, and a move towards parity is possible on the Aussie Kiwi. So we are continuing to move to the downside, and that downside break that we have seen, with, I might add, downside potential on the on the RSI below 40, falling MACD lines, bear kiss lower, stochastics bear cross lower. So any sort of rallies, I think, on this Aussie Kiwi is a chance to sell, and I think that there is further weakness that we're likely to see in due course. You can see that through the hourly chart as well, negatively configured now, where the momentum indicators in the course of the past day have just sort of unwound a touch back towards that breakdown at 104.30. 104.40 was yesterday's reaction high, but anything between 104.30 and 104.70, which again has been a basis of a pivot in the last few weeks, I think is a chance to sell on this chart, and I think there is further weakness that we're likely to see in due course. So with that in mind, I wish you good luck in your trading on today, and I will speak to you later.